I'm Troy Pospisil, founder and CEO of Ontra. I'm here in beautiful Los Angeles, California with my dog Lola. We're about to meet up with Nishen Radia, the founder and CEO of FocalPoint Investment Bank. We're going to learn a little bit about what it takes to build a market-leading investment bank and what's going on in the M&A markets today. Come join us. Hey Nishen.
Hey bud, how are you?
Great to see you.
Good to see you, man.
How's everything?
I'm great. And this is the star of the show?
This is Lola.
Hi Lola.
Lola, say hi to Nishen. We're going to go for a walk today.
She's friendly.
Yeah.
She recognizes another Englishman.
That's right, that's right. Well, as I think you know, she's an English Bull Terrier. So what brought you here?
You know, I was at Merrill, I was doing banking for my whole career, and I got to the point where I kind of hated it, and I wasn't learning anymore, and so I quit, and I came out to LA and went to grad school. I met my business partner, Dwayne, and we started our firm. And it's funny, you know, I got to a point in banking where I just had enough because it felt like a job and there was no real emotional connection to it. And then we started FocalPoint. And, you know, our principal thing is we help founders sell their companies. And we had this one deal a few years ago in Chicago where we had this entrepreneur who had a autistic son, and we closed the deal and we were at the closing dinner, and he turned around to me and he said, because of us and what we did, his autistic son would never have to worry again. And it really brought something home to me. I really realized, you know, it's not what you do or how you do it that matters, it's why you do it. Yeah. And so doing the same thing in banking at Merrill was great, but when you have a real emotional connection, it really sticks.
That's great.
Yeah.
And so what was the impetus to make the final decision, I'm not going to go back to a bulge bracket and I'm going to start my own firm?
I think it was that moment. That was a real eye-opening moment for me because I realized it wasn't banking I didn't enjoy anymore. It was just doing it for corporations. And now when the stakes actually matter to the client, it's a lot more motivating.
Yeah, that's really inspiring. Yeah. So fast forward to today, you've built one of the most respected investment banks in the middle market, and you just had a huge exit to B. Riley, a huge financial institution. Mm-hmm. I'm curious, when you started the firm, did you have this big vision of building a large, successful investment bank that might have a big exit like this?
No, that was never really part of the plan. You know, Troy, in my opinion, there's two types of entrepreneurs. There's, you know, the guy who says, hey, I'm going to climb Mount Everest and I'm going to build a company like Ontra and take it to the top. And there's other types of entrepreneur who just build it by accident. You know, you go to base camp 1 and you've made some good decisions and it's working out. So you go to base camp 2 and you still keep going, and next thing you know, you're ascending the summit. And that's us. You know, we just made good decisions every day, worked our asses off, and here we are, you know, 20 years later, almost to the day, and it worked out. That's great.
And what do you think are some of the most important decisions you made along the journey?
You know, we never took a dividend. In 20 years, we never took a dividend out of the business. We just felt like we could use that money so much better by hiring or investing. And so I think that's what did it. You know, there's two types of bankers. There's those that keep it small and try and milk it for cash flow. And there are the others that try to build something with some brand value. And we were all in. You know, we felt like if we didn't grow, we were going to die.
That's great.
Yeah.
And what are you most excited about for your partnership with B. Riley?
You know, it's a bit like a dream come true for us because the culture is so good. These guys are amazing to work with, super entrepreneurial and aggressive. And we get to do different, more aggressive things. You know, we just picked up a whole team out of Huron on the healthcare side, which is a sector we love. We picked up 10 people, which...
Oh, that's exciting.
Yeah, we could never do that on our own. So we've got the ability to compete in a more meaningful way. And the other thing is we just have so much more to sell. You know, these guys do IPOs and SPACs and fixed income trading and all these things that we never had at our disposal. So now when we talk to our clients, which now include private equity groups, we can just have a much more sophisticated relationship conversation where we can sell them a whole bunch of different things.
That's great.
Yeah.
So you founded the firm in 2002 and you just sold it 20 years later. Mm-hmm. So you've had a front seat to middle market M&A for a long time. What have been the big things that have changed in the industry maybe over the last 10 years?
You know, the fundamental way we do deals hasn't changed that much. You know, we're always quite hands-on with what we do. I think what's happened that's been really interesting is there's just so many more capital providers than there ever used to be. I mean, 10 years ago, we'd go to market, and if we went to 50 names, that was a lot, and that was considered a lot. And now, you know, you could go to 150 names on a deal, if not more. And so we've had to get smarter about how we do that, because the war for talent at the same time has become much more intense. So how do you process more work with the same number of people, or at least people who are now worth and being paid a lot more? Those two things require you to innovate, and that's why we use Ontra, because we had some turnover like in 2015, and we were trying to understand why this turnover was coming. And it's because our analysts were spending hours until 2 or 3 in the morning working on processing NDAs. And we just had to retrain ourselves to use technology and to use outsourcing to try and figure that out. And so I think we've just gotten a lot smarter about how we do deals, and we've gotten a lot smarter about how to use technology and people in different ways. And frankly, we needed to, because it was really difficult to hire people.
That's super interesting. And I'm really glad to hear Ontra has been helpful.
Yeah, we drank the Kool-Aid on that one. We did.
That's great.
Yeah.
All right, so it's December 2022.
Yes.
A lot has changed
Yes.
in M&A in the last 12 months. It feels like we've gone from another $1 billion fundraising announcement almost every day of the week to crickets in the M&A markets.
Yeah.
So what are you seeing in the markets today?
Well, you know, we went from 11 years of bull market. You know, 2011 was the beginning of it. We did it in a risk-free rate environment of 0. So this buyout boom that culminated in 2021 was just powered by cheap debt. And now, you know, if you're a borrower trying to raise new capital for a buyout, that cost of debt is now 10%, 11%, 12% money.
And what does that compare to a year ago?
7, 8% money.
That's huge.
And so companies are not meeting their covenants anymore. And so I think what we're seeing is buyers are being very judicious about what they put their money into. And for most of them, they're really focused on companies that make money. You know, in the old days when you had a 0 risk, you know, borrowing rate, companies could invest in growth, and it was, you know, an easy investment to make.
Yeah.
Now, $1 today is worth so much more than $1 tomorrow, that companies and investors are really focused on how do we get a business model that can actually make money.
Yeah.
So it's an interesting time, and we're not seeing a lot of volume. Sellers still want yesterday's price, and buyers want tomorrow's price. And until they meet, we're not going to have much more deal flow for this year.
So what do you think will be the catalyst that'll kick deal activity back into gear?
Yeah. I mean, time, you know, it'd be good to see if these rate increases start to slow down, and if people can start to get a sense of how deep this recession is going to be and how long it's going to be. You know, with the pandemic and the great financial crisis, we were in really deep, but we were also out really quick.
Yeah.
And I think this is going to be a lot more complicated than that. And I think once people start to get confidence that they know what they're into, I think we'll start to see buyers moving, and I think sellers will have to adjust their price expectations.
Nishen, it was so good to see you and
man.
catch up.
It's great
Thanks
to hang
so
out.
much for taking the time. This was a lot of fun.
Yeah, it was a lot of fun. My pleasure. And great to meet Lola.
Yeah, well, say goodbye to Nishen.
See you, buddy. Happy holidays.
Yeah, have a great
See you soon,
holiday.
man. Take care.
Talk soon.
Come on.